Hello guys, excuse me, I'm a little bit sick, so my voice is not the most sexiest voice you will hear on YouTube. A few days ago I found an article about assets that have historically performed very well during periods of high inflation. And maybe I would miss this article, except one important fact, that this tweet came from Elon Musk. And in one of his interviews in March 2022, he said that as a general principle, for those looking for advice from him, he thinks that it's generally better to own physical things like a home or stocks in companies you think make good products than dollars when inflation is high. However, the more important point to Musk's message is that physical assets are generally the safest investment during times of high inflation. And this message came from Dogefather himself, from Elon Musk, and this should speak volumes. With inflation hitting another 40-year high in March, it's becoming increasingly important for investors like you and me to consider diversifying their portfolios with physical assets. I made additional research to prove and check this point of view from Elon Musk. So wait till the end of the video, enjoy my voice and click Elon Musk button. I mean like button. By the way, one like, one step closer to exploration of Mars by Elon. So while Elon Musk referenced own a home in these tweets about inflation, I checked statistics and found that real estate in generally performs very well for investors during years of high inflation. Specifically, it's a single-family homes, multifamily, and self-storage and farm land. But running out to buy a property may not be the most feasible option for many investors like you and me. I don't want to deal with plumbing and all these issues that happens every time when you have a real estate property. And we are very lucky, there are a lot of options available to buy shares of fractionalized real estate. And while the entire real estate sector tends to be a good hedge against high inflation, certain strategies that I found are likely to fare better while costs remain high. For example, one strategy I realized is to take a REIT that can be nimble when it comes to adjusting rents to keep up with the market. Usually investors have traditionally favored long-term leases, but inflation has been rising at a higher rate. That's a problem. And that's what most trend escalation clauses will allow. So here are some really interesting REITs worth checking out to hedge against continuing inflation. For instance, one really interesting company and really interesting investment option is a CubeSmart. The ticker Cube. Self-storage properties usually have month-to-month leases, allowing operators to react quickly to changing costs and market demand. And when it comes to self-storage, REIT's CubeSmart stands out as being in the best position to withstand economic turbulence and take advantage of growth opportunities. While CPI index climbed an alarming 7% in 2021, CubeSmart's full year 2021 same property index their net profit increased 17% against other real estate REITs and real estate companies. One more interesting option is a Wise Properties, their ticker VICI. This REIT has become a real powerhouse since stepping onto the scene in late 2017. The company recently acquired the iconic Venetian Las Vegas and is now set to acquire MGM Growth Properties, which will put in the running to be one of the 10 largest equity REITs in the country by market cap. And you may ask again why these two companies performing better than others, because they are in the sector where they can quickly change leases. They can charge more and more every month. I also found one interesting table, it will be on your screens, with the REITs with the lowest 12 months trailing price to earnings P ratio. It will give you advice what type of REITs you have to buy. Of course, it's not investment advice, it's just my research that I did for myself and I want to share with you. The other play is to focus on strong but safe income. Dividends offer returns regardless of what a REIT share price is doing in the short term, but it's important to look at REITs or dividend stocks with the ability to maintain dividends pretty high. But if you would like to invest in something more interesting than dividend stocks, you can buy shares of Banksy. Yes, I'm not kidding. Art has been a popular method of storing wealth for generations, which is no surprise considering that it has outperformed the S&P 500 index for the past 25 years and appreciates at an average rate of 23% in years where the inflation is at least 3%. And I heard that this type of investment used to be available only to ultra wealthy people, but that's not true. Retail investors now have options to buy shares of valuable works of art. For instance, now you can invest in works by Banksy, Picasso, and other famous artists just with a few clicks. It's not sponsored video, but I found that Masterworks.io platform is a pretty new and interesting way to invest in art. It's not my investor recommendation, it's just an opinion for you to consider. So if you want to be an owner of a new Picasso, try to check this platform to hedge against inflation. Farmland could be the next option to hedge from inflation. And it's a physical asset that can be taken into account. Farmland acreage is shrinking across country at a rate of over 1 million acres per year, while the global demand for food is steadily rising. And going by the laws of supply and demand, the likelihood of farmland seeing significant increases in value seems high. So if you want to diversify your stock portfolio, bond portfolio, you may add some farmland shares from the platform that I mentioned, Farmland. And taking into consideration war in Ukraine that Russia began, I feel that the supply of seeds, supply of food will be shrinking in the next year, unfortunately. And the last interesting option for diversification, you can buy some strong steel companies. Commodities, including metals, have soared following Russia's invasion of Ukraine in February, with selected material stocks seeing big gains. The top material stocks with the best value and the fastest growth is divided between two companies, United States Steel Corp and Cleveland-Cliffs Inc. I personally own two of these companies. United States Steel Corp is manufacturer and seller of steel products. It operates through three business segments: flat-rolled products, US Steel Europe, and tubular products. Cleveland-Cliffs Inc. It's a major North American flat-rolled steel producer and supplier of iron ore pellets. The company also supplies stainless steel tubing and other products. So these two steel companies could be a pretty good hedge in coming 2022-2023. But let's imagine investing in steel seems too old school for you. You can try investing in materials of the future. Hydrogen. I know it's a guess, but still in some ways it's a material and it's a very important right now. Europe is racing to replace Russian oil and gas while making its economy greener. And one element that can solve both of these problems is hydrogen. The leading producer of hydrogen is Air Products and Chemicals, ticker APD. It's a chemicals company based in Allentown, Pennsylvania, that has operations worldwide. And Air Products is one of just a handful of global gas providers, and it has made a large bet on hydrogen as an energy source that can run power plants, trucks, and even airplanes one day. That's my research, that's not investment advice. I made it for myself to find best alternative way to compete with 7% early inflation growth. What are your thoughts on this Elon Musk tweet and on my research? Please put your comments below, and I'm so sorry for my sexy voice. Have a good day. Bye.